The FTSE 100 has opened almost flat ahead of US President Donald Trump's meeting with Chinese Vice Premier Liu He, where the pair are set to sign an initial trade deal. Britain's blue chip index was sitting 0.08% up in morning trading ahead of the signing on Wednesday. Both US and Asian markets dipped in anticipation of the deal. Read more. US markets hit fresh record high on trade deal optimism. The US-China trade war is expected to enter a new, quieter phase following the signing of the deal, which aims to dramatically increase Chinese purchases of US manufactured products, agricultural goods, energy and services. Having hit intraday record highs on Tuesday, the S&P 500 and Nasdaq both turned negative after US Treasury Secretary Steve Mnuchin said the country would maintain tariffs on Chinese goods until after the November presidential election. The indexes closed 0.15% and 0.24% down respectively. Having also hit record intraday highs, the Dow lost some ground to close 0.11% up. Asian markets were also subdued on Wednesday ahead of the crucial signing event at the White House, slipping into their first decline in 5 sessions. Shanghai's SSE Composite closed 0.54% down, while Japan's Nikkei 225 closed 0.45% down. Hong Kong's Seng index fared marginally better, ending the day 0.39% down. Hopes that Phase 1 could start straight away have been dashed, but it's unclear how hopeful markets were that could happen anyway, said London Capital Group head of research Jasper Lawler. The important thing about the Phase 1 deal was just that it represents a ceasefire. Uncertainty about how far and how quickly tariffs could go was very destabilising for investment decisions, he added. The Phase 1 agreement due to be signed on Wednesday caps off 18 months of trade conflict between the two largest economies in the world that has hit hundreds of billions of dollars in goods and rattled financial markets. Trump and Liu are set to sign the 86-page document in front of 200 guests at the White House. The centerpiece of the deal is a pledge by China to purchase an additional $200 billion, £154 billion, worth of U.S. goods over 2 years to cut a bilateral U.S. trade deficit that peaked at $420 billion in 2018. Read more. SEP or CPTPP, will Asia finally agree a trade deal? Citing a source briefed on the deal, Reuters reported that China will purchase an additional $80 billion of U.S. manufactured goods over the periods, including aircraft, cars, agricultural machinery, and medical devices. Beijing will also boost energy purchases by some $50 billion and services by $35 billion, while agricultural purchases will get a $32 billion lift over the 2 years, all compared to a 2017 baseline of U.S. exports to China, according to Reuters. For more on this story, visit the news article link.